taking out that high and clearing the price channel that I described and blowing through that momentum ceiling that I described should hasten the action of silver toward taking out that 30 high. So I don't think it's like we'll be there in 3 or 4 months. I think it's more likely we'll be there in a month or two.
Michael Oliver mentions a long-term momentum chart they keep on silver, which had been approached 3 times since early 2021. The recent action in the first week of April punched through this level, indicating a significant change in trend. He also notes that silver has outperformed gold during the corrective process in the last 2 years, and they expect this behavior to continue.
As we came up off the September lows, and silver bottomed first in early September and gold in late September, as we came up off those lows, MSA issued, in our constant reports, layered buy signals, meaning looking at a given metric, we saw a structural breakout. In other words, it's initial buy. What we would call our final buy signal occurred last week, and especially for silver. There was a level on very long-term momentum chart we keep on silver that had been approached 3 separate times since early 2021. And all those highs, even on price, they were lower. They were like a downtrending channel. On momentum, they were flat. And last week's action, first week of April, punched through that. And if you also examine a silver price chart, like a monthly especially, bar chart, and you go back to the summer 2020 highs and action since then, there's a broad parallel, gradually declining downtrend channel. While gold was in a sideways range, silver was in a downtrending channel. We blew through that even on the price chart by getting up to 25 area in the recent rally. As far as we're concerned, we can't offer any more buy signals unless you just want to look at a price chart and say, wow, we just took out the summer 2020 highs and silver, and that would be taking out 30. But that's a lagged, as far as we're concerned, that would be a lagged signal. Already our momentum signals have said, we're all in. Now, we also expect silver to outperform gold. It underperformed gold during the corrective process the last 2 years. While gold was more or less sideways with a brief false downside break, silver was in a downtrending channel. But that's changed. And if you just go back and look at the September lows, like on GDX, the gold mining sector, silver, and the September lows, and gold's rallied 25%. I'm talking as of Friday's close, off that low. Silver, about 45%. And GDX almost 60%. So even though the miners aren't back to their highs and silver's not back to its highs, the percent gain they've had off those lows has been dramatically more than gold. And that's the behavior that we expect to see going forward, is gold still going up, but the miners and silver catching up and outpacing it.
Michael Oliver shares his thoughts on the potential for silver to reach the $50 area again, based on their analysis of a logarithmic scale chart of silver going back 50 years. He believes that once silver takes out the $30 high, there will be a rush toward the $50 area again.
I think we just had all the buy signals we can give, all the green lights we can turn on, have turned on. And so basically what we're saying is the game's on now. And then we think if you're going to be long, you better be long. Okay, don't wait for taking out $30 silver, because frankly, we think, and I put out in the weekend report a logarithmic scale chart of silver going back 50 years, and you can see there's 2 run-ups to $50. And when you put it on a log scale chart, the action of the last couple of years looks a bit different. In other words, it looks like instead of pulling back deep, as silver did after the first $50 high and after the second one even, this time the pullback was about halfway and more congestive looking, not a sharp pullback, even though everybody in the market thought it wasn't really. And it looks like a flag type situation. And I'm going to bet that one, you're going to take out the $30 high. The high actually occurred in March of 2021, the silver high. Gold's high occurred in August of 2020. Silver almost got to $30 then, but then later got to 30 in early 21. But when you take that out, I think it'll be a rush toward the 50 area again. Because frankly, there is nothing on the charts, if you're a price chartist, for example, between the highs that we've seen in the last few years, either side of 30 and 50. It's just a void there. So if you're a potential seller, you frankly don't have anything to latch onto. It's just a thin air. And so the only thing you can see as a price chartist would be, gee, it stopped twice at 50, maybe it'll stop there again. We bet it doesn't. Okay. But right now, we're fully bullish on silver and gold, with an emphasis on silver.
Michael Oliver talks about the surge in the silver and gold markets. He predicts that silver will soon hit a high of 30 due to the momentum ceiling and price channel that it has cleared. He also talks about how gold has already made a new all-time high and how he expects silver to follow suit soon.
I think it'll go through 30 soon. I think what we've broken through in this surge that we had a surge early in the year, if you recall, and silver got up to 2470. Actually, 2475 was the high tick. And then it pulled all the way back down to 21. Taking out that high and clearing the price channel that I described and blowing through that momentum ceiling that I described should hasten the action of silver toward taking out that 30 high. So I don't think it's like we'll be there in 3 or 4 months. I think it's more likely we'll be there in a month or two. I could be wrong, but I don't think so, because the structures we just went through, both on momentum and price, indicate the beginning of something, not something late. And so usually at the beginning, as soon as you unleash, there's this vacuum effect. So I would expect a challenge of the highs, silver size, soon. Now gold's already there. In fact, last week's close on spot gold, which is the April contract, very illiquid right now, but it's there, was 2011.90. And I'm talking weekly close, not intraday highs. You go back to the 2020 high in the summer. The high close was 2010 and change. So we actually closed about $1 higher than the highest weekly close in 2020. So on a weekly close only chart, gold just made a new all-time high. And I suspect silver's about to engage in the way that would reflect that. The best thing to do is run a logarithmic scale chart, a ratio chart, go back 50 years in gold, where gold was $30 before it was even legalized for trading here, like in the early 1970s. It was trading in the bullion market in the low 30s. When it was legalized here in 75, it had reached 200. Okay? That's almost a six-fold move. Okay. Then the 1976 low to the 1980 high was almost an eightfold move. In fact, it was an eightfold move. Then the lows in 2000, which is about $250 an ounce, to the 2011 high was another eightfold move. Okay, so we've had a six-fold and two eightfold moves in a span of about 45 years. So it's not like it's unusual for gold to go up eightfold, okay? And we certainly have the fundamental macro trend background, both technical and fundamental, to justify gold doing another routine eightfold move, which is to say, don't be shocked by $8,000. It's not even unusual for it to have done that. And it wouldn't shock me for it to go way beyond there.
As we come to the end of this video, I hope you found it informative and thought-provoking. If you have any thoughts or questions about the topics discussed in this video, please leave a comment below. Don't forget to like and subscribe to stay up to date with our latest content. See you in the next one.